Good afternoon, everybody. Uh, at the outset, I would like to thank Bangalore branch for giving me this opportunity of sharing my whatever the study I made on this particular changes which is proposed in the context of the customs law in the budget 2022. Before I go into this particular topic, I thought it appropriate. In fact, the uh, topics talks also about the reforms in the customs law per se. Uh, Before I get into the topic, I thought it appropriate that I need to just give little brief as to these customs, what are all the changes which are happening per se, and especially the opportunities which are there in this particular customs law and the connected area, which is where I think somewhat our professional friends are not looking into it. Probably it's a time that they can look at this particular opportunity even on the customs law and this foreign trade policy, FEMA, this connected area, because hardly we have uh, any known professional who practices and assists the trade in compliance of these particular areas. If I look at these areas, generally at the first level, there are transactional support which the businesses look forward from the professional. And when we look at from the customs perspective, uh, primarily the challenges or the issues which comes up are firstly the rate of tax on the goods which are being imported, where the classification is a major concern. Hitherto, what used to happen was it was based on the customs assessment. Later on, though it was shifted to self-assessment, still CHA, the custom house agents, were assisting with the clearances. So the businesses were not really looking into the actual correctness of the classification of a goods or exemption for that matter or other connected matters. So it was whatever the CHA was suggesting was going through with whatever the practical way it was happening. After self-assessment, of late, the things have changed to a faceless assessment. Now, how does this faceless assessment happens? Firstly, when the goods are imported, the documents are filed, all are filed online, and the appraiser earlier who used to be sitting in that particular customs port, now there is no such concept where that all those documents will be pushed by the system to the different officers who may be sitting in different parts of the country. So he will look into those documents based on the information, data available. He will look at it and then examine all those things and push back the file, and then that bill of entry gets assessed and it goes for clearance of the goods. There, for the officer, for assisting the officers, there will be lot of system support which gives a comparison, which gives a already or classification of similar goods, the description, and they internally also have a certain informal groups which they would have created through WhatsApp. The issues which are coming up, they share with each other. So now with the free flow of information, what would have been happening for years together are coming up for questioning. It may be a classification. Essentially, somebody says, so now I've been doing this classification for years. But if we actually get into the classification itself may be wrong. But still, it was going through. But now, whether there is any impact, now there is another thing which is getting added to this. There is a GST rates. On the one hand, we are saying that the customs rate, we are doing a classification of particular goods, but in GST, when it comes, we want to adopt the different classification because the rate of tax at the GST front when we sell those goods are different. So it is actually becoming very difficult for the business to harmonize. Now, if they go back and correct, there are some chances where for the past there may be a custom liabilities which may come up. But on the other hand, they don't want to forego the benefit which is available under the GST law, so they want to change. All these issues many businesses are facing. This is when, as a professional, we can come in and support them in that aspect of classification. In fact, I would like to share one recent incidence on this classification as against the custom vis-a-vis GST. The goods was, milk machine, milk processing machine. There is no dispute as to the customs duty. The GST notification, whatever the heading which contains, it says the milk, whatever the machine. It doesn't talk about parts. This particular client imported spare parts of that. As for the classification, there is no dispute that it falls into that 4-digit classification. But the objection which is being raised by the departmental officer is description of the goods do not contain parts. You may be 4-digit level, you may be classifying. From the customs perspective, we are going by the description. Description do not contain parts. Therefore, I am not going to give you the benefit of this particular concessional rate of GST of 12%. It is level for 18%. In spite of replay, they are not accepting, and the matter is getting. In fact, what happens is there is an agricultural implements where we try to give an example, 4 digits, so the entire heading is covered, so everything should fall there. On the contrary, the example given to a one more entry in the same notification, where again there is a 4-digit, in the description column, there is a part specifically added with 6-digit heading. So they say, see, if they wanted to cover parts, they have mentioned it even for this particular parts. So it is not covering, so therefore you are not eligible. So I'm telling how the classification dispute of GST can also get started from the customs while assessing IGST, and correspondingly the inputs, all those things may come in picture. So we need to also know what is the classification which we are following or which is being followed at the customs level, which is where the CHA might have been doing something which we may not be looking into. So we need to look at that aspect of it. Second, various exemptions which which in fact in this budget, I'm going to talk about it a little later. There is a talk about phasing out a lot of exemptions. In fact, many of them has been reduced and rationalization is being happening. So then what was their business strategy as it is vis-a-vis customs and their costing which they were earlier making based on the prevailing customs duty? With the increase thing, there is a where the chartered accountants can pitch in and guide with the impact of the customs duty on the businesses. I think that is where one more opportunity which is possible to be there, which can be looked into. Then again, there will be valuation issues. Lot of valuation in the all this faceless assessment. Lot of valuation issues are being taken. In fact, there is something called a comparable price, contemporary pricing. So based on that, the other importer has imported the same goods at time at this price, but you are importing at lower price, so you're undervaluing all those questions. In fact, there's one specific change which is proposed in this budget as to the valuation itself to undo one of the Supreme Court decision as well on that aspect of it. Now, when I told that customs, you can actually look into customs, you cannot straight away practice only looking into customs. The connected aspects like foreign trade policy, the SEZ provisions, the FEMA, all this has to be connected, looked into together with any of the conditions and restrictions which is applicable for import of goods into India also have to be looked into. So it's a little bit wider connotation, but if you are addressing to certain sectors, it may not be taking much time for you to look into those sectors and what all are relevant for that and look into those aspects of it. Now, as I was mentioning, the opportunities for a chartered accountant in the customs laws are appearing to be very, very, encouraging. And in fact, Jatin sir would add after my session what else there can be there, because he knows that he was in fact teaching customs in the institute in the very beginning days, and he's also expert in that. So he can also add much more points as to the opportunities in this area for the professional, because with lot of additional work which is getting added to the CA practice and the new generation coming into, they can look at these customs law as a fresh opportunity in addition to the GST law. This I thought I would start with this points. Now getting into the topic, the customs law, the mandate appears to be clear. The rationale on leaving apart the legal side of it, as far as the tariff side is concerned, the government, as we can see, are giving more and more emphasis on phasing out the exemption for the importation of goods, whereas they want to support the domestic market to come up with manufacturing those goods wherever possible. In fact, in certain cases where they may not be in a position, I mean, we do not have a facility or capability to manufacture, only they want to confine those exemptions or concessions only to those type of goods, is a clear direction which the finance ministry has given, or rather indicated in their budget. Further also, one more thing is that, to match with the international classification coding system, we have changed lot of, reorganized rather, the tariff entries, the description, and the corresponding notifications are amended to align our existing classification of goods to match with the international HSN coding system. It's all fine, but practically, while undergoing this process, there may be a lot of challenges which we see. Practically, I have come across where, when we get into the integration, try to compare the description vis-a-vis the goods, the item which is being imported, always we think that there is no effective change in this reorganization, but it may finally results in certain circumstances the change in the rate itself. So we need to be aware and go through the carefully that any such things is brought to the notice of the government to give a corresponding clarification to that effect. Now, coming into the first change in this particular budget, we, as far as the people who are practicing in indirect taxes, especially litigation, we are always, talking about the decision of Honorable Supreme Court in case of Canon India. What is this Canon India decision? It's a customs case where in the customs law, it said any notice should be issued. It should be issued by a proper officer. Who is a proper officer was a question of discussion. In fact, when the goods are being imported at customs port, an officer who assesses the goods at that place and clears the goods. Subsequently, if there is a DRI who comes up and say there's an evasion and takes up the case, issues a show cause notice, it was said that that is not permissible because DRI officers or a preventive officers are not the proper officer to issue the notices as per the customs provisions. In fact, the matter went up to Supreme Court. Supreme Court in Canon India clearly held, yes, the DRI officers do not have a powers to issue a show cause notice. One. Second, there's one more decision earlier, Syed Ali. In that particular decision, there was a mention about a concurrent jurisdiction. Whether a particular assessee, can he be falling under two different officer? In other words, whether two different officer can exercise jurisdiction on a one single transaction or assessee. It's the Saad Ali case, it was said, if that is permitted, it would lead to chaotic position. This is what the word they use there. So, in fact, in this particular proposals of this particular budget, they have tried to overcome all these decisions and validate all the action which has happened. Between the Canon decision and whatever the amendment proposal, there was intermittently the circular which was issued by the government saying that all such cases where the notices are being issued, hold back, do not adjudicate the matter, keep it pending until further directions are issued. So those are all kept pending. And to my knowledge, most of the cases wherever the orders were passed following this principle, all those cases, to my knowledge, has been appealed by the department to the next forum and pending. Why I'm stating this is, to my knowledge, there is nothing where somebody has got the order based on this principle and the department has not filed an appeal and it has attained the finality. If that was the case, whether those people can be get covered under this validity of the provision, to my reading, those people could have got away without getting affected with this particular thing. And maybe there is a possibility that if such finding, there is an appeal monetary limit for the department appeal. If there is any such things which was possibly left out, can only be savings. Otherwise, everybody who had taken this plea and got a favorable order where the department has filed an appeal is likely to get all those cases further and further adjudicate on the merits of the case, because what all these technical grounds on which these matters were taken up, I think all those things will be re-looked into. In fact, I had an occasion that we appeared, I think, 15 days before the budget, and we quoted this Supreme Court along with many other decisions. We clearly said, you do not have a jurisdiction, but the order is already passed before the budget, stating that there's a technical point, so therefore I need not look at it. On merits, you do not have a case, so the appeal is dismissed. So, quoting Supreme Court also, they have not considered. This is the other side of an extreme. Now, anyhow, we are bound to file an appeal against that particular thing. This, anyhow, this provision will protect their action is what. Now, coming into that, how they have done, they have amended section 234, which defines proper officer. Further, section 3 is amended, where in section 3, they have included the customs officers. Earlier only whatever the commissioner of customs and all was there. They have added, addition to that, the preventive line. Further to that, the DRI line. Further to that, audit line also. So effectively, 3 additional wings of officers have been added to that particular definition of a customs officers. For people who may not be aware, the customs field, I mean, generally we will be there, who will be processing. Then there will be preventive, who will be looking into it. There will be again revenue intelligence, DRI we say. Then the audit. After the self-assessment is introduced, there is a mechanism of audit which is enabled in the customs provisions. And I'll talk about audit little later. But so all of them has been now empowered to, and further section 5 is also amended to give to cover up all these things. Further, there is one more validating provision to say, this is all whatever the changes is from now on the one hand, but there's one more provision which is there coming in as a validating provision, which says all these amendment which is happening above will be always deemed to have been there, and they will get and what all they have done is validated, orders pass is validated. In fact, I was reading one of the articles from one advocate. He has raised a concern that this particular wordings of validating all the actions, is it confined only to the authority or even the correctness of the order? If somebody has passed an order incorrectly on the merits, whether is it going to validate even that orders or it is only validating the authority to pass order is what was a doubt. I think the intention is clear, but reading may lead to some confusion to that effect. So I'm just bringing that, sometimes how extreme also it can be read, which can go against many of the principles. So we are saying that now effectively all these technical grounds are being put down, are being clearly said, no, you are not going to get all these technical grounds. It also gives a message, though you fight, ultimately will come out with some technical validation. In fact, one consequential question which I'm just posing to Jatin sir, which he can answer towards the end when the open session is there. Now, these are all amendment or changes in customs law. In couple of cases of Karnataka High Court, following the decision of Canon, certain proceedings in the service tax have been stayed, where the notices were issued by DGGST. So these changes are all only in customs, whether the principles can still be applied to the service tax notices which are still pending, or excise for that matter. If so, then again will there be one more round of retrospective validating provision to take care of this, is what it is like. One is prospective with a validating provision giving a retrospective validation for all the action which has been taken in the past. So effectively it's nothing but having a retrospective effect. So that is about the decision on this canon and the impact and what it makes. So though we take, because I've seen many of the replies which were filed hitherto, we would have filed only on this technical point without getting into the merits of the case. So if this type of action happens, if we have not put across, though we may not be wanting to present it, at least we should keep those grounds ready and be ready in the files, though we may not submit. If these things comes, we may have to submit, because the time lapses, the knowledge would have been forgotten, in the sense the people would have handled what was the merits, the facts which would have been there, which could have been possibly taken, all those would have been forgotten. So when any such technical things comes up, you be prepared with the technical grounds as well as on merits, that the merits grounds be in file to be used at a later point in time. This is what I suggest practically, because we see a lot of changes happens in the organization. The factual aspects gets forgotten with the people, new people coming in. So that is one point I thought we'll have to take. So we can take a clear clue that government is not going to leave us with all these technicalities unless you are lucky enough to get away before any changes happens. That's all. Now the second aspect is the customs had a practice of taking the data trend of the goods being the import data, and based on that they used to question the transaction value, reject the transaction value, and getting into reassessment. The matter went up to Supreme Court in case of Century Metals, and they questioned what is the basis on which you have questioned this particular thing. Comparative data cannot be the basis to reject the transaction value. You should have a valid reason. Section 14 read with Rule 12. You should have if you have a doubt, they did a comparison with reason to doubt versus reason to believe. They said reason to believe is different, reason to doubt is different. Reason to believe is a positive thinking, but reason to doubt means there should be some action, negative action, which you should come across to doubt that particular transaction. If there is nothing on that, you cannot invoke that particular provisions and try to get into rejecting the valuation. Now, in order to empower themselves to ask all this information, etc., they have amended section 14. One in that clause 4 is added, where for certain class of imported goods, additional obligation can be imposed, asking for those goods, and wherever there's a doubt, they can specify this information, etc., to be furnished and to carry out and question the valuation. This is as far as the valuation is concerned. One more changes which has taken place in this proposed to be taken in the budget proposal is provisions relating to advance ruling under the customs law. In fact, advance ruling has become very famous in the GST because of the various reasons, and we also very meticulously follow the advance ruling and the propositions comes out. But it is important for us. The advance ruling is though relevant to that particular SSC. You may read through the rationale given in it. If you find that rationale makes sense, the reasoning makes sense, you may try to examine your case over there. If the rationale doesn't found, I mean, you don't find that rationale having a sense and has not considered all the relevant factors and the judicial precedents as per you, then you may relook whether to adopt, follow, or not follow, sort of a thing. So anyhow, that is from the GST perspective. But in the customs law, they have made some changes. The first change which is there is where earlier, if somebody had filed an application for advance ruling, after having filed application for advance ruling, they had a window of 30 days only to withdraw such application filed for advance ruling. Now, what they are proposing to do is, they said you can withdraw any time before the advance ruling is pronounced. I'll tell you practically what happened. One of the clients wanted certain advance ruling. We went to the advance ruling, tried to explain all our case. The questions which we came from the bench, we realized that we may not be, they are not inclined to accept the line of argument which we are taking. Then we asked, okay, we may give one more hearing. Then we had a discussion. Then we thought it may not be proper because the case may go against. Even if it comes for litigation, we'll fight it out. Then we actually filed a letter for withdrawal of the application. So, no, advance ruling, yes, but sometimes it also comes handy. If it is you are in a contract with somebody, you are telling your other party, supplier or the customer, that tax is payable, but other person is not accepting. He says, give me an evidence. So you can go to advance ruling to get an evidence in support of that. Anyhow, so I'm just telling. So they have, that is there in the GST law. There's no time limit to withdraw. Here they have in fact removed the time limit and said any time before the pronouncement happens. Once a pronouncement happens, earlier there was no time limit up to which this advance ruling is applicable. It was applicable until there is a change in facts and circumstances based on which you sought a advance ruling. Now the change which is proposed is that any advance ruling so obtained is valid for 3 years, or change in circumstances or facts based on which you sought a advance ruling, whichever is earlier. So now they've added this one more thing, that period 3 years. So you will get a relief of the year. After that, you can just go back and want to reapply unless there's any change in the judicial proceedings, etc. Next change, which is, and in fact, what they have done is the 3 years. If you are already taken advance ruling, 5 years back, say, for them, the 3 years will be counted from the date after this finance bill get enacted. From then, you will get further 3 years. So the starting point for the past will be from that day onwards. One more thing is there, the act was specifying the fees to be paid for advance ruling. Whereas now what they are saying is the fee shall be prescribed as per the rules. Basically, the fees will be through rules, not in the act. So they can keep changing, modifying, etc. That is coming into the power of the government. So this is what is the changes as far as the advance ruling is concerned. Now I told that when I was mentioning about, we'll talk about an audit. Once this self-assessment regime came in, because earlier it was clearly a customs assessment. When you wanted to import, before the goods were getting cleared, it was supposed to be assessed by the customs officers with all those examinations, etc. Then they had that got changed into a self-assessment mode. So where you will self-assess your liability, valuation, etc. If they have an objection, then only they will come out with question, etc. Now, uh, especially with this faceless assessment, etc., you would have got the goods cleared and enjoying some benefits, classification, whatever would have done. In fact, there was a provision which was added enabling the audit of the importers who had imported those. Though this provision exists in the statute book, in fact, morning I was just talking to Jatin sir. I thought one of the clients they got a customs, but actually it was a customs, sorry, EOE audit was not from the customs audit as an import audit. So, to my knowledge, this customs audit have not started. So, because GST audit, what all, how things we face. Customs audit also, they may come and check, give me the brochure, give me the technical these things, report. No, that is now made it a self-assessment in 2011. So that is where that they can come for audit at a later point in time and do audit on whatever the sampling method with there. But presently they have not gone into it yet. They are still setting up their internal wing to start that particular what do you say, audit. So once it comes up, again, this is when I said a professional like us can get involved and be aware to support that and give the view, because obviously there will be difference of opinion between them. Then that will obviously lead to a litigation. The litigation at that stage is better to handle than the litigation being handled at the clearance, because practically whoever handles the customs know that there is going to be a lot of pressure which will be put by the customs officer if you don't agree to their assessment, their classification, their valuation, because you need a goods, because otherwise your business gets altered. Are they going to say we are going to blacklist you, we will issue a arrest warrant? These type of threats are going to be issued unnecessarily. So they are forced to clear the goods. But in case of an audit, it is not a case so, until unless they give a clear-cut clarity to saying. In fact, there's one proposal which is being made in this where I'll come to that. So there we may be able to bring in all the technical points, legal points, issues, the evidences, all those aspects which is required to be taken as a professional. We can take all those arguments, fight it out legally, and limitation period may come. So many possible grounds to protect the past instances. So there, I think, is a very good opportunity if this customs audit of the importer starts. Then the next thing is uh, there is one provision which is being added where it says if during the course of audit or inquiry or investigation, if something is found as to one, the short payment or non-payment of duties, etc. Two, the benefits of scheme, the scripts, etc. you would have wrongly availed, or the duty drawbacks you would have wrongly claimed, etc. In all those things, that officers will make their observations and push the records to the concerned officer who's in charge of the assessment of the imports, or who has given or issued the scripts, etc., or who has sanctioned the drawbacks. The matter will be referred to them and they are going to adjudicate the matter. So they have now made the segregation of the powers as to the people who are going to investigate. They will not decide. There is going to be transferred to the adjudicating authority, is what is one more change which is proposed. Next is one more change which is being commented upon as to information. The Act is proposing that any information on imports of goods or export of goods, or the importer or exporter, shall not be published unless except by the government. If any such thing happens, they are liable to a penalty or prosecution up to 6 months or 50,000 or both. So is it, are they trying to curtail the freedom of sharing information, or maybe they are trying to say wrong information or the data? In fact, practically, I have seen some people had all this database readily with them, who are all have imported a particular goods from which port at which rate, and this data was available for a cost. So somebody wants to snatch away the things, go to the thing. It was impacting the business adversely in some sectors. Probably they would have complained or taken this matter in order to put them on hold, and most of this data actually was not coming through a proper channel. It was not coming through a right source, but it was getting circulated. So they have clearly said published, that published includes photocopying or making copy or electronic or publication. So all these things is covered. So effectively they say only the importer or exporter should know his data, and the customs, the offices, for administration purpose, they can have it, but not for the general public to have consumption, except for the government to release those data for the general public. There is again procedural changes as far as the import of goods at concessional rate of duty rules 2017. In fact, alongside of introduction of a GST, there was a rationalization which they had to make for EOUs. The concept of EOUs were effectively simplified, where they said no bonding. The bonding is effectively not there. You have to follow this particular provisions of this rule. You need to follow and provide all the information or the thing. So they actually simplified per se. But still, practically, if somebody goes and sees, they're still in the habit of maintaining all those old system of bonding procedure, though they maintain that whatever the amount debited to the bond, etc., but there's no specifically a bonding procedure, extension of bond, etc. Further, recently also there was a relaxation of extension of all the any licenses, etc., which is having a time limit to expire. They said until those will go on until it is cancelled or for the violation or those purposes. Now here in these rules, what are all the changes they are trying to make? First, they are saying this entire data information to be fed in for these rules are through a common portal. So it is not going to be an individual, like a GST portal. There's going to be a specific portal for filling in the details relating to these rules. Next is any importer who wants to avail the benefit of this rule has to furnish one-time information in form IGCR 1. There is a form in which they'll have to sort of a registration. They'll fill up all the information, and once that is accepted by the portal, they will be issued with uh, import of goods at concessional rate identification number. So this number will be the basis. So when any importer wants to use avail the benefit of this rule as per any notification, they need to quote this particular number along with the bond number. So what is that it is going to happen? So that import assessment, when it happens, automatically, the officer is going to assess the bill of entry based on these details. And once the bill of entry is assessed and accepted, the exemption is extended, automatically the bond, wherever required, will be debited with that amount in the common portal itself. So this is what they are proposing to do. And when it comes to records keeping, there is no requirement of specific intimation to be given on each and every receipt of goods. There is no requirement. So, however, they need to maintain their own records in a particular format, and wherein the date of receipt and all they need to maintain. Further, if the goods are imported, but for whatever reason, the goods are received in short, or you don't receive the goods at all. So you assess the duty, but the goods you didn't receive. Then, because portal has already debited the duty relevant to that, so there's a specific form, IGCR2, where to that extent you need to upload the details in that particular form. Then there's going to be a monthly statement which is required to be filed in IGCR 3. So this is what is there. And further, they have said there's going to be a procedure which is going to be notified as regards to the job work or rework, return, all those things. There's going to be a separate set of procedure which they're going to come out with. Then next point, which is the changes which we heard on the floor of the Parliament by the Honorable Finance Minister, was that the SEZ provisions, we are going to make a complete changes in the legislation of SEZ. We want to include state into that particular ambit, and also we want to extend the benefit to the existing industrial units, etc., was being told. But still we are away. We have to come out with the fine prints, how it is going to come, what are all the aspects. But in addition to that, they are also talking about simplification of the procedures through a common portal or the electronic system of monitoring only on a risk-based verification, not in each and every case, to say that the SEZ operations will be eased out and liberalized. So this is what is said. We need to wait. They are saying by September 2022, this scheme would be brought into picture and operationalized. Okay. One more change which is there is about the project imports. What is this project imports? Certain times when you are carrying out certain notified projects or the projects which are covered in that particular chapter, there may be varieties of goods, each of which may be falling into different rate of tax. Instead of that, there used to be one consolidated concessional rate, either nil, 2.5% or 5%, as the case may be. With there's a procedure of registration of the project through a project import, etc. And in such a case, all the imports in respect of those projects were permitted to be cleared under that one single rate at a concessional rate or whatever it is which was fixed. Now, what is being said is that this particular scheme is going to be phased out. What it is being said is you are permitted to register any of your projects upcoming or whatever it is, up to September 2022. You are permitted to register. Now, up to September 2022, if you register, you are permitted to import those goods up to September 2023. After 2023, you can't import under this particular scheme. Second, if any projects which are not registered up before September 2022, from September 2022 onwards, they may not get this benefit anyhow. So this is what is a thing which has been changed. So we need over or were planning for that. Similarly, there is also talk about the capital goods rate increase in a phased manner also. When it comes to certain exemptions, they are saying that for 350 items, exemption will be phased out over a period of time. So there's a big list which they are looking into. In fact, this rationalization and all started almost more than a year back. In September, one chunk was looked into. Now there's one more chunk they have been doing it. And at the same time, they're harmonizing all the entries to match with the HSN, the amended or the new HSN released by the UN, the customs WTO thing, where they are modified. So somebody who are using the old explanatory notes to the HSN may have to look at the new one and get the new amended HSN explanatory notes for the updated and amended. In fact, the tariff is already amended, and if you see the customs, CBSE website, if you will find the customs tariff as updated as on 1st January 2022. One more changes which has been done is, if you see, always somebody when we were looking at, we used to say there's a tariff rate, there's an effective rate. What is this tariff rate? What is effective rate? If you look at the customs tariff, first schedule customs tariff for the import of goods, there used to be one entry, one goods, and there used to be one rate. Then the government used to issue a notification whereby they used to say for this goods, the rate of tax, effective rate of tax is this. So the tariff, though it was 10%, the notification was making it at 7.5%. The reason was, if any changes to be made for the rate, the tariff amendment, we had to go to Parliament to make a changes, whereas in tariff was always at a little higher side. So if they wanted to give a relief, they used to give a relief through a notification which government could have done. This was the rationale which was being followed. Now it is being said, why confusion 2-2? We will try to rationalize as much as possible. We are going to remove as many entries as possible from an exemption notification and bring out those entries directly into the tariff itself. So you need not see two things. I think only then that exemption notification entries will have a lesser entries for us to enter. So our tariff books size may get reduced to some extent. So this is one more thing which is being done. Again, in this exercise, if there is any errors and all, it may have some impact which some importers may have to undergo. Next, as I was mentioning in the beginning, many of the rationale which I told, the government is looking for Make in India support. So wherever possible, what all the goods which can be manufactured, which is available in India, they are trying to phase out the exemption. So they want them to buy from an Indian market, make the Indian industry grow rather than importing thing. At the same time, in case of a steel, where the price have increased substantially on the scrap, etc., there the anti-dumping duty which was being there levied, that has been removed, so that the price of the steel, because steel prices are going up, so they want that import to come in to balance the So these are all, rate changes for different products, depends on sector to sector, which one has to look at from the that particular perspective. One more aspect which is there, which came through a clarification, was the cess. Whether the cess is applicable when the basic duty is exempted. So basic custom duty, assume it is an exempted. So while computing cess, whether cess also, which is to be applied on that particular tax, should be 0, or irrespective of that, we need to apply the cess. The CBIC has come out with a clarification saying that when the basic duty is exempted, then the cess would also be exempted. It is, though welcome, everybody likes it. Judicially, if we look at it, there is a Supreme Court decision which said merely exempting a basic duty does not mean there is an exemption for the cess. Even though the basic duty is exempted, cess is to be applied in the context of excise, that particular decision. But anyhow, that is the thing. Now, between circular and a decision, which one to be applied? Obviously, we'll apply. The officers are bound to follow. So it's not bound actually. There's a Supreme Court decision which says that any circular which is contradictory to the law is to be considered as non-existing or invalid. So some officer can still take that particular proposition, but not now. Now, one more consequential impact is somebody uses a script and pays the customs duty. Actually pays is, he doesn't pays it, he debits in script, but consequently there will be an exemption in the customs notification. Now, if whether even that basic customs duty, if it can be said to be exempted in such scenario, thereby cess also will get exempted, or cess will not be exempted in that scenario. So this issues also may get raised, and issues may get into litigation per se. So I think hopefully I've covered all the legal changes from the customs perspective. Any questions if it's there, or would like to ask Jatin sir to add anything? Questions, I don't know whether.
No, it won't come in 2B. Under section 38(2), there is a present provision to say that you have to insert the IGST paid on imports. So presently it is not linked. The proposal is to link IceGate. Recently I saw a circular that press release that IceGate is being linked to GST portal. So IGST paid, if it populates to 2B, you will find it. If it doesn't populate, you will take it. Yes. Don't take it twice, but if you haven't taken it, take it now.
Jatin sir, it is showing, but it is not correct and complete.
No, don't take it.
Yes.
Right. Section says you have to wait till all the vesting conditions are fulfilled, but the portal is forcing you to take the credit. Correct. Because next month, if you haven't taken, it's not carrying forward. This is the example that sir was also explaining. If I haven't taken in one previous month, can I take that delta in the next month? You should be eligible to take it. My suggestion is you take that in the next month. You will receive a scrutiny notice in ASMT 10. You have to explain that it was earlier months because it was goods in transit. Don't take it ahead of time.
Alternatively, what suggestion also is coming, I'll tell Jatin sir. What is being told is, okay, now actually your example is on 30th, I clear the goods at customs. I have not received. Not actually import the supply, local supply. He has dispatched on 30th, he has uploaded, but I received on 2nd. So as far as in my books of accounts, it is coming in the next month. So the apprehension is that if I do not take the credit in that month, in fact, there's a question over there. There's another question there. So I don't take credit in the say November month, but I take it in the December month. That's not exam. So December month, the December month I may not have any credits at all. If I take this, they say difference, they will issue a notice. So alternatively, what was suggested by one of the CEOs, sir, I will take in that month, but I will not utilize it. I'll keep that amount as it is, but I will utilize in the next month when I'm really entitled for. But the challenge again I explained to them was, this may not be possible because our order of utilization doesn't permit to keep IGST as it is, CGST as it is, SGST as it is. So it's going to get mixed up. So this is a practical difficulty which I do not appears to have been addressed in their internal system. Now all those things are going to crop up, and there's one question, Jatin sir, where they're saying, can a credit be claimed for in the returns to be filed for November, which is December 20th?
See, whenever these dates are specified based on the due date for filing a return, then that there is some clarity. But when a hard close date like November 30th is specified, it becomes difficult to give an answer because we still don't know what that interpretation of November 30th might be. So to answer that question, then it is not about the November return filed on December 20th. Whenever you file, 30th November is the last date by when the 3B should have been filed. So it's not on December 20th.
In other words, you would have shown a credit in the March month return, February month return, August month return, or September month return. You file that any of those return where you have shown the credit of the previous financial year within 30th November. That is what they are trying to say.
Will not. I would suggest you take it according to your accounts in the next month when you receive it. 1 month you have taken less credit according to 2B. Next month you have taken excess. They will ask you a question. Provide them the answer. Yes. Absolutely.
That is true. That is true.
I would recommend that.
And also,
in transit books. Very true. Very true.
in fact, what as Jatin sir was mentioning in his session, the 2B will have two parts, eligible and restricted. So in your books, consult of both, plus something which is not reported, there's a 3 reconciliation, then restricted you will not take. Out of the restricted, when it becomes out of the restricted, when again it will come into the eligible, which month, whether it's going to be shifted, whether it's a running account or the account for that month, there's a lot of confusion still exists. They only design the provision. Practically how the design or structure is going to come will have a lot of things.
To some extent.
Yeah.
No, but he's saying that 2 beats appearing in January. Yeah. That is the problem. December.
Yeah. Jatin sir, I would like you to just add as far as the customs and the connected subjects, the opportunity for CS.
Opportunity for CS. Sure. See, as far as customs law is concerned, as on tariffs, there has been a consistent effort to scale down the exemptions, the number of entries where exemptions are issued, the number of notifications, now unifying the exemptions and the tariff notifications. From an opportunity point of view, customs related transactions and advice to taxpayers regarding those transactions today is coming from, like Rajesh was mentioning, from clearing agents. If you ask any importer, where does he get his knowledge and advice about customs law? It will come from Hindi cinema or from clearing agents. You understand? So therefore, this is certainly an area where knowledge of finance, knowledge of the business and customs law is necessary, and chartered accountants are in a wonderful position placed to get into those areas. Now, we often tend to think that we'll only have a role to play as far as advisory or litigation is concerned. In GST, there's extensive amount of planning, there's extensive amount of post-import audit, management audit to review the correctness of compliances, and incentive schemes. If you see last maybe 8-10 years, incentive schemes have undergone changes so significantly that taxpayers have either forfeited any incentives or claimed incentives which they should not have claimed and now keeping their fingers crossed. So these areas of monitoring and audit, it is very much in our area of expertise. So certainly this is something that we can get into. There is some amount of reluctance to get into a new area, but we should not look at customs as a new area, but another area where our existing skills of audit and verification can be extended. So certainly that is something that our members can get into.
In fact, I would like to share my experience of one of the thing. There was a application filed MES. They were supposed to have declared in the shipping bill, etc., which they had not declared, and the quantum of benefit which they were entitled were in crores. By mistakenly, CHA had not guided or whatever it is. Then they approached, it was rejected. Then we had to file a writ in that particular case, and as per the present status, the writ, similar matters, the writ is allowed in favor, and if that goes through, we may get a complete, that benefit of that crore of rupees, more than, it's actually multiple crores over there involved. I'm telling, so there the issue is, it was actually where if the persons who are doing an audit, a statutory audit, if they were aware, why are they not claiming these benefits? Or they had a consultant who could have looked into all these aspects. As Jatin said, management audit, the internal audit can actually add a lot of value addition to the businesses where the benefits which could have been availed could be prompted and taken. Okay. No, I think both, another that we covered in question answers.
There was one more question that I think I picked up. It said we are getting blanket notices for multiple issues. See, as far as notices are concerned, we have to differentiate between an inquiry titled notice and a show cause notice. Both are often thought of as the synonyms of each other. If there is a show cause notice, it has to flow from only 4 sections, 63, 73, 74 or 76. If it is an inquiry, there are several other provisions under which it can be issued. So we'll have to identify under which provision this is flowing under. If officers issue letters calling for information, taxpayers need to be very careful as to which jurisdictional officer is issuing it so that taxpayer can prepare the appropriate response. It will invariably be calling for records. It will not be calling for some calculations or some other, because what they need to carry out. So if it's information being called for by the jurisdictional office, we need to identify the section under which it is being called for. Please also keep in mind that there's a tendency to outsource the investigation. Taxpayer needs to control their excitement to participate in such outsourcing activity. Limit your responses to questioning the provision, providing the facts. Providing the interpretation is not something that one needs to get into, because interpretation is for the tax officer to do. We're getting blanket notices where the officer is asking for last 5 years data for a small amount of liability. As far as this notice is an inquiry calling for information, if it is for 5 years, then perhaps it includes service tax period also. Taxpayer needs to be very confident with the tax position they have taken and not be in self-doubt. That's when all these things will come. I would strongly encourage you to please find out the provision of law under which this is being issued. If it is not under a valid provision, you are required by section 160 subsection 2 not to entertain the proceeding, and inform that you are not entertaining this proceeding because of section 160 subsection 2.
Also, in the continuation of what Jatin sir was explaining, the business or even the chartered accountants, most of them would have been handling the VAT related proceedings or VAT related transactions, interaction with the VAT department, I get a lot of questions. Sir, they have issued an endorsement. Sir, will they come for recovery? This is endorsement in audit. So, please understand once any findings coming through an audit, there is 4 stages which has to go through to finally get converted into a demand. First, audit inquiry, then audit report, then probably there's a one more thing called a DRC 01A, pre-show cause notice consultation sort of a thing, rule 142 1A under that provision, and next comes the show cause notice in DRC 01. So now you might have replied the same thing first, second, third, fourth. Finally, then there will be a hearing. After that, there is supposed to be an order. In fact, many a times the clients who may not know all these procedures things, sir, ಅದು ಅವಾಗಲೇ ಕೊಟ್ಟಿದ್ವಲ್ಲ sir, we had already given all those information there. Again, why are you typing the same thing and giving, sir? So we need to know that this, until all this process is completed, there cannot be a conclusive demand on the SSC. And as you said, once you already replied, when they issue DRC 01, you need to simply say, we already replied by download data, you have not accepted it, we go by that, please drop the proceedings based on that. You need not again repeat the same thing for the record purposes. If you don't respond, and in fact, especially this DRC 01A, I suggest that audits, anything to law you fight out, but facts be clear as to the computations, etc. Many a times, as Jatin sir did mention, the person who will be aware of the facts will be kept out. Many a times somebody else will be handling the department. They'll be only focusing on the issue, not the data and quantification, which itself could have brought down that particular thing. If you are not brought out at that stage and you admitted, etc., etc., generally there is a tendency that, they miss out on this fact-based thing. If there's any factual error, they have noted down if they're proceeding. That factual data, you may put it if you do not want getting too much technical at a later point in time.
Yeah, correct. There was an audit inquiry. Audit report was issued under 65.6. Its report, the title says Rule 1014 and 65.6. It can't be under 2 different provisions. 1014 is first, based on replies. 65.6 has to be issued. It was a 101-page report. 101-page report, demanding on some 27-30 observations have been made by the audit party. I'm really amazed that they had that kind of time to sit and work on such an extensive audit. And the concluding para is, you have given 7 days time to come forward and discharge this tax. Now the taxpayer got very nervous that such a large amount of money, before even understanding these many issues, getting necessary advice, 7 days will be over. So they wanted a reply. The reply that was suggested to be filed and which was filed was, received audit report, thank you. Because under 65.6, there is no link to 79 for recovery action. But taxpayer officer also thinks that because of the VAT practice, that this is an assessment. So now you have to demand. If you are not happy, you have to file an appeal. So received audit report, thank you was the short reply filed. Now officer called up and said, maybe you know something, which is why you have given such a short reply. What is this going on? Initially, he must have been anxious that such a reply was given. So he said, received reply, thank you. And then 65.7 was pointed out, which says that once you have issued an audit report, if the tax is not discharged, you have to issue a show cause notice. So therefore, this is something that's what Rajesh's point is, significantly different from that. We should not get nervous. In 7 days, you have to understand all those 27-30 points and come up with a response. Taxpayer goes after a 65.6 report. Taxpayer is meeting the department, trying to convince again, hopefully to convince them and prevail upon them to understand that this is not the way it works. Once a report has been issued, that's the end of audit. Show cause notice has to be issued, and then adjudication will take over, like Rajesh was mentioning.
Yeah. In fact,
only after that, not before that. Yes, sir.
Absolutely. Before that, it's merely a process of audit. That's all. In fact, in one of the case, to just say they issued audit report that missed out some observation. They issued an amendment order to that particular audit report, referring to section 161, the rectification of mistakes apparent on record, to amend that particular audit report. As this was mentioning that you can't, once audit report is issued, they cannot change. So only possible is rectification. So since VAT regime, they are used to this rectification proceedings, they followed that again to make a changes to that effect. We are, sir, over to, thank you, sir.
Friends, we had a fantastic session on indirect tax, including budget proposals, and especially both the specialists mentioned for all the newcomers to the practice, the opportunity available in customs audit, customs side practice. I believe it's a very, very lucrative. Post, I think, self-assessment scheme also introduced there. I think there are a lot of opportunities available for members. I request youngsters to look into those areas, which may be a lucrative one. So we had a fantastic session. The comments also received online from several members. Thank you very much on behalf of Bangalore branch. Thank you very much, Rajesh and Chetin sir. Fantastic we had. Thank you very much for all the participants. Your overwhelming response made us to organize this program. So as a token of appreciation and a gratitude, let us present a memento to T.R. Rajesh Kumar. Friends, thank you very much for all your support. So 21st is going to change over to the new managing committee. I request all of you to participate and continue support the Bangalore branch. Thank you very much. Have a nice